Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Tuesday, the 6th of August here in London. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, bouncing back, Japanese stocks recoup much of yesterday's losses as markets rebound from the global rout.
Kamala Harris secures the Democratic presidential nomination in the US, the first woman of colour to do so.
Plus, the Chancellor Rachel Reeves refuses to rule out a capital gains tax rise as she speaks exclusively to Bloomberg while on a trip to North America.
Let's start with a roundup of our top stories.
Japanese stocks are rebounding as markets regain some of the losses from the global rout. The S&P 500 index on Wall Street sank by 3% yesterday, its biggest one-day drop since September 2022. Speculation about a potential US recession, an unwinding of AI hype and a surging yen hitting carry trades led to a selling spree across global equities. Chi-Kai Chen from BNP Paribas Asset Management says it's good to see a rebound.
Hopefully this breaks the fever, but I think we're still in fairly uncertain terms at this point in time, given that in some of the regional markets, we're actually still doing quite well on a year-to-date basis, and investors are sitting on profits might be taken to take some off.
BNP Paribas Asset Management's head of Asian and global EM equities, Chi-Kai Chen there. US stock futures are also up on a wave of optimism.
Well, two Federal Reserve officials have tried to reassure the markets amid that turmoil. Both Chicago's Austin Goolsbee and San Francisco's Mary Daly said that last week's bad jobs numbers were only one data point. Daly also indicated that interest rate cuts are coming.
We will make policy adjustments as the economy delivers the data so that we know what is required. If we reacted on one data point, we would almost always be wrong.
The San Francisco Fed president added that she still sees the labour market as, quote, reasonably solid, as most employers aren't cutting jobs. Markets are still pricing in almost 50 basis points of cuts at the Fed's September meeting.
Meanwhile, Australia's central bank has kept interest rates at a 12-year high for the sixth meeting in a row. The RBA says it, quote, isn't ruling anything out on policy as core inflation remains well above target at 3.9%. Australian stocks fell immediately after the decision but have recovered slightly.
Demand for protection against Black Swan events has surged as traders rush to insure their portfolios against an extreme market crash. The cost of options, which pay out when the S&P 500 falls by 30%, 3 deviations, are at their highest since the start of the pandemic. Until recently, the popular trade was to use options to bet on calm in equities markets or to chase gains in technology shares. The dash for protection came as the Nasdaq fell 3% on Monday and the VIX fear gauge spiked to the highest level since the coronavirus outbreak.
To the US presidential race, Kamala Harris is now officially the Democratic nominee and the first woman of colour to lead a major US political party. The vice president won a virtual roll call vote to get the formal nod to run against Donald Trump. She's reportedly narrowed the search for her running mate to Pennsylvania Governor Josh Shapiro and Minnesota Governor Tim Walz.
The US and its allies are working to avert possible war in the Middle East. Concerns are growing that a retaliatory strike on Israel for the killing of top Hamas political leader Ismail Haniyeh may come from Iran at any time. The State Department spokesman Matthew Miller says that the US Secretary of State Antony Blinken is encouraging regional leaders to pursue peace.
The Secretary has delivered a consistent message in all of these engagements. We are at a critical moment for the region, and it is important that all parties take steps over the coming days to refrain from escalation and calm tensions. Escalation is in no one's interest. It's not in the interest of the region, and it's certainly not in the interest of the millions of civilians who just want to live their lives free from violence and conflict.
Matthew Miller from the US State Department speaking there. Bloomberg understands that other interventions include Jordan's foreign minister making a rare trip to Iran for peace talks, whilst Qatar has also been in contact with the Islamic Republic. Meanwhile, the head of Israel's Parliamentary Foreign Affairs and Defence Committee suggested the country should, quote, take the initiative instead of waiting for an expected Iranian attack.
Rachel Reeves says she can't rule out an increase to capital gains tax. In an interview with Bloomberg, the Chancellor said changes to the wider system are a delicate matter.
It's always important when you're deciding tax policy to strike the right balance. Of course, you need to bring in the revenue to fund vital public services, but we've also got to grow the economy. And I won't do anything that makes it harder to achieve that economic growth and prosperity.
Rachel Reeves was speaking during a trip to New York and Toronto designed to draw up foreign investment. Economists have speculated that she may opt to bring capital gains tax rates in line with income tax in a bid to generate revenue and boost Britain's public services. Reeves also suggested that private equity firms who co-invest on deals might receive more favourable tax treatment, a move which could lure foreign investment to the UK.
And lastly, Keir Starmer has promised an army of police to deal with ongoing riots across the UK. The Prime Minister held a meeting of senior ministers, police and prison chiefs yesterday. He says that the unrest is unacceptable.
Whatever the apparent motivation, this is not protest. It is pure violence, and we will not tolerate attacks on mosques or our Muslim communities.
Keir Starmer's spokesman Dave Pearce also slammed a post by ex-owner Elon Musk stating that, quote, civil war is inevitable in the UK in response to video footage of the rioting. Police say that nearly 400 people have been arrested after 6 days of disturbances in England and Northern Ireland. Now, in a moment, we're going to examine all the angles of the market meltdown and today's rebound with two of our best market reporters. But first, just a brief word on the UK riots. The Prime Minister there, you heard, he held this Cobra security meeting yesterday. He told broadcasters about mobilising a, quote, standing army of police officers to deal with the disorder. There are, of course, concerns about, the numbers and the ability of police to deal with so many flare-ups in so many different parts of England. Also, the rioters were in course, at least some of them, some of that initial processing beginning. The UK Prime Minister, though, also extraordinarily now involved in an exchange with Elon Musk after his provocative comments.
Yeah, Elon Musk writing on his social media platform that civil war is inevitable in the UK in response to a video showing footage of rioting and remarks from another poster that it was a result of, quote, migration and open borders. The Prime Minister's spokesman had to respond to this, saying that the post that was no justification for the billionaire's remarks. So interesting to see the government responding. The spokesperson also saying that police and government had seen some evidence of foreign state involvement in online bot activity driving the far-right sentiment online.
Yeah, OK. So one of the issues that we are watching for you here, of course, in the UK. Let's turn our attention, though, to the markets now, shall we? Japanese stocks are surging today, along with US and European equity futures after yesterday's stunning rout. But investor sentiment remains fragile, with traders still pricing in full rate cuts from the Fed this year. Joining us now to discuss, Bloomberg TV anchor Kriti Gupta and our Markets Live Asia team leader Garfield Reynolds. Welcome to both of you. Thank you for your time. Kriti, what does sentiment around stocks look like now today after the extraordinary trading days we've had?
Well, you're seeing green on the screen and across Asia, but you're also seeing it in futures action right here in Europe as well. I think the takeaway here is that it's not necessarily one that's related to the fundamentals. When you see an extreme reaction in either side, whether it's to the upside or to the downside, you are due for some sort of reversal. And I think that's exactly what we're getting today. You also have to be careful of the margin of the move. Just because you're seeing swings of, say, 10.5% in positive territory does not yield, of course, reason to be confident to the extent of 10.5%. So I think the one thing we can be sure of when it comes to sentiment of stocks is just that volatility is going to be the name of the game. It's going to abate. You're not going to see as big moves as the week goes on, depending on the news flow, of course. But for now, this is really just a matter of reversing what we saw yesterday.
Yeah, Kriti, we heard a little from Mary Daly there, and we had, of course, the ISM services report out yesterday. How much did that go to sort of reassure markets that, first of all, the Fed has things under control?
Very, very little, because off the back of it, you have calls out of JP Morgan, Citi, Bank of America, even our very own Bloomberg Economics that are saying 50 basis points of a cut in September is a must-have at this point, because the markets have basically forced the Fed into a corner. At least that's the argument that they're making, especially when it comes off that payrolls report. Remember, the read-through, the ripple effect that the Federal Reserve can no longer just be sensitive to what you're seeing in the data anymore. So things like ISM services, they now have to keep an eye on what's going on with financial conditions and markets, the stock market, the currency market, and of course credit spreads, all of which tanked yesterday, are going to be a big part of that, especially if you see continued panic.
Okay, Critty, very interesting. Garfield, let's bring you in at this point. I mean, you were speaking to us on yesterday's programme about the possibility that the market moves, maybe an overshoot. Is the panic selling over? Firstly, how would you describe the rally today?
Well, the rally today is, in many ways what you would expect, given there was such a huge sell-off and there was no obvious immediate, existential trigger. There was no COVID pandemic, there was no Lehman Brothers bankruptcy, and yet, equities moved just about as if there were, or even further than they did back in those days. So given that lack of an obvious immediate trigger, a rebound was likely, but that doesn't get us out of the woods. Now the question is, how sustainable is that rebound? What's going to be the longer term impact? You have to assume that global portfolio managers, for example, are going to be drastically reducing their allocations to Japan because of the volatility. It's just not worth going into a market where you don't know if you're going to turn around in a couple of days and find you're down 20%. So you'll reduce your allocations to that. That means there will be measured selling still to come, and there will be pressure on other parts of people's portfolios as to whether these now look robust enough amid what is obviously a more challenging environment, especially with geopolitical and US political risks lingering in the background.
At the same time, we had this meeting happening today in Japan, the Ministry of Finance, the Bank of Japan and regulators holding this meeting to discuss what's happening in financial markets. What should we be thinking about when monitoring that meeting?
Well, we'd be thinking about what they might say as regards to if they want to affirm that BOJ policy is moving in the right direction. If they want to simply say, look, markets have taken this the wrong way. We're confident that we're heading in the right direction. The alternative would be that they directly address the idea that they want to reduce volatility across markets. It's a tough situation because in many ways the Bank of Japan had been excoriated in a lot of quarters for not moving more rapidly towards a tightening cycle. Then finally, when it does tighten, it gets hit with a truly extraordinary sell-off in Japanese stocks. That's partly also because of what's been going on in the US, not because of what's been going on in Japan.
Yeah, absolutely. The criticism of the BOJ. What do you think the RBA decision in Australia adds then to the picture this morning? I mean, OK, it was a hold, but that was also something that we were factoring in as potentially playing into markets as we think about the Fed too.
Well, yes, it was a hold. And so far, we're still waiting for the presser, but so far the statement looks a little bit more hawkish than might have been expected immediately after the weak inflation print, or soft inflation print that Australia had last week. So that's a reminder that even if the markets are going to get very excited about how economies are in trouble, central banks will be more deliberate. One of the questions is, will the Fed really meet those bets for a 50 basis point rate cut in September? And the RBA at least is pointing you to the idea that it won't, and that could be the next volatility trigger if we get some data. We don't get much more in the way of data or even Fed speak this week, but next week we get US CPI, we get more Fed speak. If we get data and or rhetoric that pushes back against people who are locking in 25 to 50 basis points in September, and the central bank saying, well, we're still not sure, we're still not fully confident, that could be a trigger for another wave of concern.
Are we now looking then at the dust being allowed to settle for a couple of days on markets before those data points that you're talking about coming next week?
Well, that would be the hope, I think, out there. And indeed, there are signs already that the selling is settling down. The buying is settling down a little bit in Japanese stocks. They've paired some of those gains, which I would argue is somewhat healthy. What you really want is for markets to settle down for any rally that comes from here for equities to be, built around something sustainable, not simply, oh, look, these stocks that were a bit too expensive 2 weeks ago are now suddenly very cheap. And so we're going to buy them and hope that things go back to being the way they were before the meltdown. That's day trading rather than sustainable trading. So you want to look for 2 or 3 boring days in markets before you can hope that we get sustained improvement in the outlook for risk assets.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.